Taxes related to cryptocurrency can seem like a very complicated topic that stops a lot of people from actually investing into crypto, but in reality, getting your taxes sorted is very straightforward. The majority of the time, there's no special forms that you need to fill out or any action that you have to take in order to properly declare tax on crypto investments. Because it's a relatively new type of asset, there aren't a lot of concrete laws surrounding it, and it's a bit of a grey area when it comes to IRD. Throughout this video, I'll be walking you through IRD's website so that you can get a more comprehensive idea on what the laws are around cryptocurrency taxes and my personal experience with the topic as well. So I'll leave the article linked down below in the description box if you want to take a look at it for yourself. This has been a very requested video, so make sure to leave any future content suggestions down below in the comments, or if you want to get in contact with me more directly, you can also DM me on Instagram. So when do you actually have to pay tax on your cryptocurrency? So in a nutshell, you have to pay tax on your cryptocurrency when you make a profit from it. IRD identifies three main areas where this can happen. Either when you sell a long-term investment, you exchange your currency for another, or when you are rapidly day trading between different types of cryptocurrencies and only holding the investment for a short period of time. IRD also says they look at your intentions when you're purchasing your cryptocurrency. They give the examples of holding it as a long-term investment, buying crypto as a hedge against inflation, or trying to diversify your portfolio. Potentially you also have some stock market investments and you're trying to dabble in cryptocurrency to get a more balanced and diversified investment portfolio. In conjunction to why you bought the crypto, they also look at other factors like, can your crypto investment have other monetary benefits like giving you staking rewards, the length of time that you hold the asset, and other similar transactions that you've made. It doesn't appear to have any guidelines around spending crypto with a crypto debit card such as the ones offered by WireX or BlockFi that function like regular debit or credit cards that allow you to spend your money at EFTPOS terminals or even withdraw cash from ATM machines. At the end of the day, IRD wants you to pay money on your crypto profits. Their perception, which is also accurate, is that no one would invest into this asset unless they would think that they would make money from it. It doesn't matter how long you hold the asset or what you invest in. Even on IRD's examples that they give on when you should pay tax on your crypto profits, they talk about individuals that hold their investment for over 3 years, but this has no bearing on whether or not you pay tax. There's no clear guidelines on this asset the same way that rental properties have in New Zealand, where there are minimum periods of time where you have to hold on to the rental property before you can sell it, otherwise you'll be stung with capital gains tax. So assuming that you have made a profit from your crypto and you want to declare it, how would you actually go about doing that? You would need to file a tax return if you have taxable income from your crypto investing activity, meaning that if you've made a profit from it, you'll need to file a tax return. The type of tax return that you complete varies depending on if you're a business or an individual. You would need to complete an IR3 form, which is related to individuals who make extra income that isn't from factors such as wages, salary, or dividends. This form requires you to fill out various pieces of financial information so that you can properly declare the tax on your crypto investments. It's best to get the guidance of a broker who has experience with cryptocurrency to help you fill this out. New Zealand crypto exchanges like Easy Crypto pre-calculate the tax that you would have to pay from your investments. They have to provide this information to IRD, but Easy Crypto doesn't enforce the payment of this tax. They just have to provide it to IRD as they have to comply with all financial legislations. The accuracy of this can vary depending on what you did with your cryptocurrency after you bought it. For example, if you look at my Easy Crypto profile, the amount of Bitcoin that it says I currently hold is not accurate because the majority of the Bitcoin that I've purchased was used to top up my Crypto.com Ruby card, and I don't actually have it stored on a type of wallet. It doesn't account for any exchanges that you may have done once you have purchased your crypto. If I buy $1,000 worth of Ethereum and send it over to Exodus and I exchange it into Cardano, Easy Crypto has no way of knowing if I've done this, and therefore the accuracy of my portfolio on Easy Crypto may not be very relevant anymore. Because of this, it would be up to you as the investor to actually change the transactions that you've made on Easy Crypto to be accurate. Therefore, I don't think that IRD will actually enforce the tax payments that Easy Crypto calculates because users can change what is entered on here. Actually keeping track of all the investments that someone has made with cryptocurrency is very difficult, and I think due to how new the asset is, IRD is just starting to wrap its head around the whole topic as well. If you're someone someone who does a lot of crypto investing and you have quite a bit of money that you have to declare or a lot of tax that you have to pay, using a New Zealand platform like Taxoshi is very beneficial. It will help you provide a more detailed outline of how to actually pay tax on these profits. This service provides data on previous crypto investments and more detailed information if you're someone that has a larger crypto portfolio. In my personal experience when it comes to paying tax on crypto, I haven't had to deal with it yet because I just hold my investments long term. I just dollar cost average a certain amount of money each week using Easy Crypto into 3 different types of investments. Potentially, if you're someone that's constantly day trading or spending $5,000 to $10,000 per investment on a weekly basis, always changing between the types of crypto assets that you hold and are making a profit from this, then looking more closely at an IR3 form or getting the advice from a broker or tax advisor that has actual experience with cryptocurrency may be more relevant for you. But if you're someone who casually invests in crypto and makes a few $100s here and there from buying some Bitcoin or Ethereum, then it's not going to be something major for you. As I said earlier, actually keeping track of what someone does with their crypto is very difficult because of the nature of the asset. People may also try and buy their crypto from overseas exchanges like Binance and Coinbase, and this again will make it even more difficult to actually track how much profit someone has made. To give you a better idea of how the government actually perceives cryptocurrency, I'll play you an interview from August 2021 where the Finance and Expenditure Committee of New Zealand allowed people to make public submissions about different areas related to cryptocurrency, such as taxation, environmental risk, and future use case in New Zealand's currency system.
My name's Duncan Webb. I'm the chair of the Finance and Expenditure Select Committee. We've opened a briefing on cryptocurrencies. We'd love to hear from you.
Hello, I'm Andrew Bailey, and yes, we want to hear from people about what cryptocurrencies are, and what we will be looking at is both the risks associated with them, but as well as the opportunities, because they're going to play a very important part of our financial system in the years to come.
And I'm Barbara Edmonds. I'm the Deputy Chair of the Finance and Expenditure Committee. I'm really keen to know whether the tax rules that we have in relation to cryptocurrency are fit for purpose.
I'm Helen White. I'm a member of the Select Committee. I'm really interested in the environmental impacts of cryptocurrency, which are quite enormous, really, and I think we need to take those into account. I'd love your stories also about scams, because there has been so much risk in this area.
So if you've got something to say, do get hold of us. The details are on the parliamentary website. Do remember that your submission will be public.
As you can see from this interview, the people in charge of making decisions related to crypto don't seem like they have a lot of first-hand information about the asset. And due to this, I believe we are a long way from having legitimate and concrete laws surrounding how cryptocurrency is taxed, because it's just too new of an asset. And even with stock market investing, there aren't proper legislations around that. And that has been around for far longer than the investments that can be made with crypto. And if you want to learn how to properly declare tax in New Zealand when it comes to stock market investing, check out this video on screen so that you don't get stuck with any fines or tax bills from IRD from not properly declaring your profits on stock market investments.